Hello and welcome to Capital Cosm. We are live. Nothing in this broadcast is to be construed as financial advice. I am not a financial advisor, so please do your own due diligence. Give us a few seconds here to let people come on in. Huge news today from the Cameco third quarter conference call. We're going to dive into that report. We're going to look at some interesting tweets, some interesting takes on the uranium thesis, as well as some TA to kind of close off the day. So before we get started, though, let's send out the link. Let's send out the link to the rest of the folks over on X. I think the video should be not yet. There it is. So we've got some really big news to share with you guys. And just share this really quick first. All right. So let us dive in to the presentation. Wait for a few more people to dive in. So we've got some people joining now. All right. So Cameco's 2023 Q3 conference call. This just happened today, October 31st, 2023. Let's dive into the charts here. What do we got? So they're kicking things off by looking at the uranium spot price holistically across history, all the way back to 1968. Now, this is something we don't have on the likes of TradingView, but you can clearly see the three big uranium bull markets, including the one we are currently in today. All right, this isn't on a log scale. This is just purely, a pure raw view of the uranium price over time. So they've got it all mapped out as well. So in the 1970s, that spike was nuclear demand and focus, too cheap to meter. So that was the big nuclear renaissance. Demand started coming online for the very first time. So you had a lot of, nuclear reactors that need to be built for the first time. Makes sense. Then what happened? Defense inventory drawdown, industry consolidation, lack of investments, and that's how these commodity markets work. They work in cycles. They go from overinvestment to underinvestment. The underinvestment drives supply down. Supply down drives the price up. Price up drives incentive to actually produce the stuff, and which drives another bull market, and the cycle repeats. But it's really interesting. We had a pretty elongated bear market from the early 80s all the way out until the early 2000s. So about 20 plus years in a bear market, which then led us to the mid 2000s bull market. And that was supply side focus. So supply disruptions in focus, and expected demand growth, i.e. from China. Okay. So, uranium, that's the bull market that the likes of Rick Rule and a lot of grizzled uranium veterans, participated in. That's when you saw stocks like Paladin go from 1 cent all the way up to $10, 100 baggers left and right. That's what really drew in. That's what draws in the current generation of uranium investors. But that, quickly faded away. A huge shot to the upside, downside movement, correction, dead cat bounce. Fukushima happened in 2011, and this trade had been in the gutter from 2011 up until, let's say, I believe the bottom of the uranium spot price was mid 2016. So the bear market here wasn't nearly as bad as the bear market from the end of the 70s bull market. So a huge contrast there. But I will say that despite the window being narrower here between the bull and bear market, we're currently in the bull market, as you can see here. But we'll get to that in a second. But this was done through commercial inventory drawdown, as well as lack of investment. Again, this is how these commodities work. Overinvestment to underinvestment. That's what drives the bull and bear cycles. But what's not on this chart, though, is that we weren't in a supply deficit in this 2000s bull market. But nonetheless, I mean, you had uranium go from, like, I believe it was $10, somewhere around there, $10 or maybe a little under $10 to $140. You know, you're talking about something over a 10x, a 10-bagger in the spot price itself. So when you see the spot price rise, you clearly expect to see similar movement, not similar, but actually pronounced movement on the equity side. So we had the drawdown, commercial inventory drawdown. That's what precipitated the last bear market. And then in 2016, we bottomed out. And now we are in the third uranium bull market. Supply uncertainty, real demand growth, geopolitics, climate, etc. It's like a perfect storm. You know, the last bull market was primarily supply driven. Demand driven. There's some disruptions in focus, but we weren't dealing with any supply deficit. And we'll get into that in a second. You'll see exactly what I'm talking about. But, you know, you've got demand growth because of the climate change movement, the green energy movement. We've talked about numerous times on this channel. Renewables can't provide consistent and reliable baseload energy that you can get with something like nuclear. And the supply side is just as bullish. So there's not going to be, we can't always rely on a big mine from Kazakhstan through Kazatomprom to supply. Eventually those are not going to be enough to meet the demand. The supply-demand deficit with this stuff is going to be highlighted. I'll show you in a second what exactly I'm talking about. But yeah, I mean, we're at $75 now. We're $74.50, I believe. And, we just hit the Fukushima high, the pre-Fukushima high, rather. So we've got some resistance here to beat out. But I think we'll be victorious in the end. And what's interesting is that, the 70s bull market, uranium topped out around just a little over north of $40. The 2000s bull market was just around a little under $140. And so, there's a lot more money. The currency has been more devalued than ever. And, I fully expect, we've heard numbers from commentators out there in the space that have talked about a $300 spot price. I don't see that as something so unbelievable. Really, I mean, inflation adjusted, $140, that's like half, that's like $70 just to 2007 prices. So just my opinion there, guys. But demand side, from a historical basis, so this is looking at it from a climate crisis POV. So they're anticipating, so they're kind of here making the case that demand for this stuff is largely going to be precipitated by countries needing to meet their net zero goals. Because nuclear power is, doesn't produce any CO2. And so this is what they've got. This is the historical global median surface temperature. So we've been fairly constant from the 1950s up until the 90s, let's say. Temperatures have been steadily rising up since then. I'm not trying to debate, climate science or anything like that, but they anticipate they've kind of broken it down into multiple scenarios: a low change, a moderate change, and a high change. Even on the low end change of things, which is this blue line here, you're still anticipating a similar move up, the same rate of change that we've seen since the 90s up until today. And then the high change and moderate change or scenarios is it's a pretty deafening increase, leading all the way out until 2100. Are you guys going to be holding out? Are you guys going to be hodling your uranium stocks up until 2100? And then they've also, they've shown, they're kind of here illustrating the demand from all of the headlines making their way through the media. You've got everything from, let's see, can't really tell who these media companies are, but, support for nuclear has grown dramatically, says the global agency chief. U.S. sees a role for nuclear technology in Africa's energy shift. Africa wants to get on board. The U.S. is back to looking towards nuclear to grow their nuclear fleet. Industry groups and governments pledged to back new nuclear. Nuclear was once taboo with the green energy folks, but not so much longer, aside from the likes of Germany. Swedish nuclear. Swedish government moves to change the law. Europe's backpedaling on their stance on nuclear. Expect further upside for uranium stocks as governments are committing to nuclear power. Ottawa announces up to $74 million for small modular reactor development in Saskatchewan. Canada's on board. The EU's on board. EU clinches power market deal after nuclear spat between Germany and France. Nuclear energy cooperative launches in the Netherlands. So it's pretty ubiquitous. This kind of demand is fairly ubiquitous across Europe, aside from Germany. Kenya molds adoption of nuclear power to tame climate crisis. Yeah, I don't think Kenya really cares about the climate crisis. I think they just want to industrialize like the rest of us do, and a lot of these countries do. But anyways, just over half, 55% of Canadians support using nuclear energy to generate electricity. So there you go. And there's the sentiment now in a place like Canada. In a place like Canada, of all places. I'm just kidding, Canadian. A good portion of my audience are Canadians, so much love there. Demand more durable than ever. Again, guess more headlines here. NuScale Power and Nucor corporate sign memorandum of understanding to explore deployment of small modular reactors to power Nucor electric arc furnace steel mills. Blockchain firm Standard Power to procure 24 small modular reactors. So yeah, small modular reactors, which I'm sure you guys have heard of. Essentially, there's reactors the size of a bathtub, just maybe a little bit bigger. They can power a small city, a small town. And there's less downside risk of a crisis event, the likes of Fukushima. Cloud providers eye nuclear power's AI snaps data centers. Yeah, that's one thing about AI, guys. The computing strain that AI facilitates, it's pretty big. So we're looking at a lot of energy in the future that needs to be accounted for. Constellation planning, significant nuclear-powered hydrogen facility at LaSalle. So yeah, lots of demand. The narrative is definitely shifting, as we can see here. So where's production coming from? So we've got to take into account the geopolitics of all this stuff. And with nuclear power, it's not just, we can't just focus on the mining side. There's obviously the production side of things. There's the conversion side of things. There's the enrichment capacity side of things. And look, where a large portion of all three of those activities occur. Russia. From a production point of view, in 2023, Russia's about 13%. 13% of worldwide uranium production comes from Russia. 4% comes from Niger. Why is Niger important? Well, they just recently had a coup, and there's a lot of gray area in terms of who is, which side of the geopolitical fence is Niger going to fall under, whether it be the BRICS, whether it be the West. And then the rest of the world is 83%. So in 2023, forecast of about 142 million pounds of uranium to be produced. Now, on the conversion side, Russia accounts for even more than that, 25%. Rest of the world is 75%. Enrichment, even more than that, 37% on the side of Russia. Okay? The rest of the world, 63%. So we can't just be simply myopic and just look at the production forecast. If any of these, you can't run a nuclear power plant, you can't run a nuclear fleet if any of these steps here aren't running or just lacking the capacity, right? So if we're going to cut off Russia, and we haven't yet, by the way, by way of supplying our nuclear or uranium, I think we supplied about $1 billion worth of uranium in 2022, I want to say. But if tensions keep escalating, which they probably will, there's going to be less trade across the world, and supply is going to get more constrained because war and talks about war are inflationary. Again, more demand side sentiment. You've got Silicon Valley billionaires rallying around nuclear as the energy crisis looms. You've got some TikTok user, Miss Nuclear Energy, teaching about nuclear power. I don't know if you guys know this person. I don't have a TikTok. Maybe I should get a TikTok. A lot of my audiences are actually on the older side. It's really interesting. If you look at my demographic skew here on my channel, they're mainly people older than me. So maybe I should tap into TikTok and try to grab some of the younger minds and kind of even things out. But yeah, you've got social media influencers coming in, starting to bang the drum of nuclear power. And then you've got this. It says here, these nuclear bros say they know how to solve climate change. Okay, so I guess we're... Is that what we're going to call ourselves? Nuclear bros? The nuke bros? You feel a nukie? Or, and again, most of my channel, if you look at the demographics, it's mainly dudes. Actually, let me show you guys something. I'll show it to you later, maybe. But let's keep going through this slide deck. All right, so looking at demand growth from a U.S. versus non-U.S. perspective, you've got the U.S. here. 2023 is the baseline. This is uncovered uranium requirements. So the additional amount of uranium needed from a U.S. and non-U.S. perspective, and just look at how high this, demand is only going to expand at an unrelenting rate. Insane. So you've got the U.S. here in light blue, dark blue is everyone else, and the rest of the world is. They're going to need the energy, guys. They're going to need the energy, especially the likes of Africa and certain parts of Asia and South America. I don't know about South America. I haven't heard much of nuclear adoption in South America, but I know for sure in Europe and emerging marketplaces and Africa and Asia. That's where a lot of the demand is coming from. This chart I know you guys are very familiar with. This is an updated version of the supply side, the demand versus supply side of the of uranium. So you've got primary supply here in this blue shaded area. You've got secondary supply in this gray shaded area. And then you've got the demand side illustrated by this red line. This is your base case. And now you've got your high case here illustrated with this green line. Now what's interesting is that we've already gone up this much in the uranium price, right? From $20 to $75, all the while supply has been able to meet demand, right? What happens when you start to see a convergence from the demand line in red or green versus the blue versus the shaded areas? The primary supply side is only going to dwindle and get smaller. What's interesting as well, secondary supply was destroyed in 2021. Destroyed. Look at that. Boom, back down. Here we are in 2023. And it's only going to get worse. And so when you look at this market and you try to impose upon it the same type of thinking of prior bull markets, like the 2000 bull market where we just shoot up, have a big like orgasmic burst to the top, and then a huge move back down. You know, we might see, something like that. But I see it as something localized. Something like that might happen on a localized basis, but I don't believe it'll spell out the end of the overarching uranium bull market. Because if you look at this thing 20 years out, I mean, we could be in a secular bull market for quite a while with localized tops and bottoms and all this kind of thing. But if you fast forward to 2040 and you probably look at these charts, these uranium spot charts historically, you'll probably see, huge swings and huge downs, but higher highs and higher lows. Because the demand case is only growing and the supply side is only dwindling. And again, as we alluded to before, we can't just be myopically focused on the mining side, on the production side, etc. Because there are a lot of intermediary steps to actually get uranium explored to pumping in a nuclear reactor. Right? You've got to refine it. If it's UF6, you've got to convert it. You got to do conversion. You've got to enrich it. And then you've got to convert it to UO2. And then, I'll let you look. I mean, there's a number of different steps. And the geopolitics of the world is not making things easier. So, I mean, there's just so many points of, failure, yes, from a top of the funnel to bottom of the funnel point of view, POV. But, this only puts more pressure on the supply side of uranium. And on the demand side too, because more entities, they're going to want to get this stuff and get it converted, enriched, etc. One way or the other. And here you've got Cameco listing out their tier 1 and tier 2 assets. Of course, you've got Cigar Lake. They're responsible for 18 million pounds a year. And they are the world's highest grade uranium mine, which I think everyone knows. But if you don't, that's okay. Now you know. You've also got MacArthur River in Key Lake. And MacArthur River is the world's largest high-grade uranium mine and mill. And that is responsible for 25 million pounds a year. Now remember, 2023 is forecasted for, what is it, 142 million pounds a year? So a large chunk of that comes from these tier 1 assets. Inkai as well in Kazakhstan, that's 10.4 mil. So you've got 25 plus 10, 35 plus 18, 53 mil. I mean, that's about a third. It's about a third of all uranium production comes from these tier 1 assets here that Cameco has. Tier 2, Rabbit Lake in Saskatchewan, US ISR. Millennium, Yeelirrie in Western Australia, Kintyre in Western Australia as well. So, yeah, a lot of the uranium eggs are in one uranium basket. And that's Cameco and Kazatomprom. And I think that's it from the chart side of things. This is just some. Oh, they've got their leading ESG performance. Yeah, don't you feel good? It's feel good, CCJ holders. Got a good, your leading ESG performance. Good job, Cameco. Before we dive into the charts, I want to kind of highlight some interesting tweets from X. So this one is from Patrick Downs. I had a very good thread. I want to read it out to you guys. I want to share it with you. It says, my thoughts on the uranium trade, which I've shared with a few people privately lately. Number one, they think they understand the thesis, the trade, but they really don't understand just how tight and how coiled this trade is and how limited supply is outside of basically two companies, exactly what we talked about, CCJ, Cameco, and Kazatomprom. And, for all you people out there, complaining about the uranium price not being higher, well, it's a coiled, the longer it takes for the price to react, the more violent that reaction will be. Okay? So it's like a coiled spring, as Patrick here puts it. Number two, broadly speaking, the uranium trade is viewed by many, not all, to be a pump and dump based on confirmation bias from the last U-bull market. But we have an entirely different setup today than in the 2000s, especially with no real supply coming on. That's exactly what we alluded to as well. In the last bull market, there wasn't a real supply deficit, but nonetheless, you still saw a huge spike, a huge upshot in the uranium price. This time around, we've got supply deficits stretching all the way out until at least 2040. Okay? At least 2040. Supply deficits seem to be more consistent, more, how do I want to put this? There doesn't appear to be a cavalry coming to save the fuel buyers. Now, this is a rather opaque market. I mean, there's always a chance that some entity out there might offload a bunch of pounds into the market and upset the apple cart, but based on what we know, that's not the case. If we just go off the data that we have, this time it's different. No, don't crucify me. I know I'm not supposed to say that, but that's what it is. All right, number 3. Most junior explorers, developers, are still massively undercapitalized. You need only look at the following list in cash balances of ASX, Australian U stocks. Of the developers that can bring on pounds in the next 5 years globally, there is likely only a couple of possibilities. Well, let's take a look at these Australian explorers and developers. So you've got so in the very far right column, you've got the probable pounds that they have in millions. So EEL in Niger, they've got 21.5 million pounds. ACB in Botswana, 365 million pounds. But a lot of these are zeros. I mean, if you're going to be using, we used 142 million pounds of uranium just this year alone. And we all saw what the demand case looks like moving out in the future. It's only going to get bigger and bigger and bigger. And if you've only got something, like 365 plus 331 plus 21, you can't even make it out a few years without depleting all these mines. All right, number 4. Spot at $75 or even $100 doesn't address any of the challenges to uranium supply in the short to medium term. The issue isn't spot price. The issue is underinvestment over a decade in new mines and new greenfield explorations. Bannerman and Lotus Resources have no plans of coming online yet. So there you go. Patrick is correct. We'd go all the way up to $100, and the likes of Bannerman and Lotus and all, in the likes here would still have no plans of bringing their uranium supply on the market. Because these things have been dried up of CapEx, and you need money to explore and develop mines, guys. Okay? It's one thing to know you have some deposit beneath you, but what good is it if you don't have the CapEx to actually deploy to extracting it, to developing the mining, and then eventually pulling the uranium out? Pulling the metal out, rather. I know it needs to be converted and enriched before it becomes uranium and all this stuff. Yes. All right. All right, number 5. So in summary, many think if spot gets to 100 or even 120, supply problem is solved. No, it's not. And most brokers, fund managers, when asked about uranium, think the supply issue gets solved quickly at 100. And he says it doesn't. It's going to take time, not just higher spot. Exactly. You can't just flip a switch. You can have all the money in the world. But at the end of the day, it takes time to explore and develop a mine. Okay? Capital can be solved. Time, you can't hasten time. This is a tweet from Yellow Bull. Thought it was interesting to share with you guys as well. He says, the price of uranium could easily move $2 to $3 with only 500,000 pounds purchased. Once capital will flow into financial vehicles, we could see huge spikes. This is from Askar. Forgive me, Askar. But Askar B, let's just call him. When he spoke to him yesterday, The market is extremely tight, and so he'll upload that chat on Friday. So be on the lookout for that. And if you don't follow Yellow Bull, and if you don't follow Patrick Downs, highly suggest you do. So $2 to $3 with only 500,000 pounds purchase. 500,000 pounds. I mean, Sprott was buying 500,000 pounds on the daily at one point. This was back in 2021. Sprott Physical Uranium Vehicle Trust, that is. So, yeah. Let's take a look at the charts. URNM finishing strong at some of this bullish news coming out of the CCJ Q3 call. Looks like we're sitting on some resistance that traces all the way back to April of 2022. This was the April of 2022 hump. There's still some buyers who bought up here that are still willing to sell at that same level to break even. Technical analysis basically boils down to mob psychology, and you've got to essentially read the charts as such. So when you're looking at these resistance lines, you've got to think in terms of buyers and sellers, buyers battling sellers. If you're a buyer at this level, then you've been underwater for a year and a half now. So there's some resistance here. So, strong green candlestick for the day. Let me know. We hit our heads on this resistance line, got rejected, but we still closed fairly strong. We'll see tomorrow how the market reacts. URNJ also finished strong. Of course, we don't have that much data when it comes to URNJ. But, you know, short-term resistance seems to be right there. So tomorrow we might break through. And even if we do break through, we might retest. We'll see. Spot still holding steady at 74.50. Again, this is the same view that we looked at in the Cameco charts. And we are right there. We are at there. We actually surpassed. We actually surpassed the what's it called? The Fukushima high. The pre-Fukushima high. Yep. See? Broke through it. Could we backtest? I don't know. You know, I'm kind of apprehensive about using TA with the uranium spot price. It's because it's kind of, I mean, it is an opaque market. And a lot of the principles of TA that apply to stocks might not apply to a market such as the uranium spot price market. But nonetheless, URNM versus UX versus the metal itself. Let's go back on a daily view. Daily candlestick view. Boom. Resistance line broken. And that's what we want. We want URNM to outperform the metal. Because when that happens, the metal goes up as well. Capital starts flowing downstream of the metal, rises, you know, that's a sign that there's a rising tide because all boats are being risen. And I just kind of want to actually illustrate this to you guys really quick. So let's look at, so notice how we? So March. Seems to be a little bit of a relationship. No. Sorry, guys. Thought I was on to something. URNJ versus URNM. Again, we want to see outperformance from the more speculative side, and we did for today. Green candlestick. Bouncing off support. We want URNJ to outperform URNM, which should outperform the metal. Let's also look at uranium priced in gold. Now, uranium priced in fiat, where like 40% of it was created post 2020. Look at uranium price in gold. And let's actually zoom out a bit. Take a long-term view. And when you price this thing in gold, which many contend is real money, we still have a long ways to go to hit this 07 high. I mean, you're looking at something along the lines of a 5x move, or close to a 6x, actually. A 6x at $75. So what is that? $75 times 5.8. $435 uranium. I mean, $300 doesn't seem all too challenging now, does it? When you price this in gold. Uranium to oil. See how uranium's performing against oil. So this is where we were in 07. This is where we are now. I mean, to take us back to those 07 levels, holding oil constant, 167%. So uranium seems to be, uranium appears to be fairly priced in oil, in terms of oil. All right. Let's read the chat. Proism says, this time is different than 2003, 2007, LOL, but you will get those overbought and oversold for maybe 8 to 12 years. Yeah, I think that's what we talked about. It is different because the supply-demand scenario is a lot more pushed out into the future. And so what I kind of see is, you might have highs and, might, like you put it, overbought to oversold on a local basis. But from a 20-year POV, this thing is going to have higher highs and higher lows. It's my bet. Derek Cho says, Rick Rule says the easy money has been made in uranium, indicating you had best pick your stocks correctly. All boats rise, but dilution is a big issue to companies not in production. Yeah. I mean, we just looked at some of these Australian developers and explorers. I mean, a lot of these guys don't even have any deposits that they know of. And even if they do, a lot of these projects might not come into fruition. And even if they do come to fruition, there's going to be a lot of dilution that takes place to bring it to fruition. So, totally. Andres Andrzej Halleck says, he also said that now is the time to make the real money for the next 12 to 8 months. The next step is the big money. Yeah, so easy money's been made. If you bought in 2020, I'm sitting on five baggers or more from having bought at that point. So that's easy money. The real money is made now over the next few years or so. And I don't know how high this thing can go, but depending if it overshoots, then that's your big money, right? If it overshoots like it did in 2007, then that's the big money. Depends on how much attention this trade gets, how much attention it grabs from retail, and so forth. Andrzej, am I saying your name right? He also says, I tend to take the other side of the trade. A producing mine is a potential problem. A next gen has a perfect mine because it does not exist. That's actually a really good point. That's one of the reasons that people invest in companies that might not, this whole premise behind the growth investing phase. Because once you actually start being profitable, then valuations go up astronomically. So yeah, when it comes to not having a mine, no harm, no foul, right? Likes the next gen. If you put in the exact portfolio, this is from Proism, if you put in the exact portfolio as URNJ and same holdings in your charting program, could you see what URNJ looks like over a long term? Yeah, I actually could. That's actually a really good point. I will do that I'll try to remember to do that in the next video that I do on uranium. When we do some TA analysis, try to remember to do that. I'll look up the holdings in URNJ and we'll manually add in those holdings. I think TradingView, you can only add in 10, so I'll add in the 10 highest. Good point there, Proism. Andrzej also says, picking your stocks is an important step, but even more important is the way you execute your trades. Yeah. It's all about your entry and exit. You could be correct at your entry point, but if you don't execute at the right time, if you don't exit at the right time, then you're no longer correct. You can't just get the entry right. You've also got to get the exit right. Derek Cho says, NXT is best of breed. The deposit size is huge. It certainly is. And the extraction is in situ. Extraction is in situ. Well, all right, guys. If you enjoyed this video, be sure to give it a like. Comment down below. Let me know what you think. Share with all of your friends, even if they don't have any, even if they're not uranium investors. Try to convince them to join the herd here, the uranium herd. We're not to be confused with the rest of the herd, right? We're an exclusive herd. So what we trade in is actually contrarian. We're the cool guys. We're ironic. No, we're not. But like, comment, subscribe, share. Really appreciate your time, guys. Oh, I've got another chat from Andrzej. He says, Rick Rule in his latest interview endorsed MGA. I'm assuming that's Mega Uranium, which is undervalued position in next gen with other holdings as a bonus. Mega Uranium, MGA. I think that's Mega Uranium. Yeah, it's Mega Uranium. Wow, he actually endorsed Mega Uranium. It's pretty, I mean, for Rick Roll, I don't know. I mean, I don't want, it seems like it's a more riskier bet than he's been known to take lately. But I don't know. Rick knows what he's doing. Market cap of $113 million. And significantly off its top in 2007. Interesting. Rickroll also pushed Goviax, but I follow Katusa, who said, don't invest in AK-47 countries. Yeah, well, you do you, Derek, but I also heard a counterpoint to that argument. It actually might be more dangerous to invest in AR-15 countries, given, a lot of the crackdowns that might ensue from the Western side as well. We'll see. Proism says UEC and Denizen have above ground uranium they can use to finance their mines. That is a great situation. Best of all worlds may help them both to not dilute as much here. Yeah. Yeah, I mean, these deposits, they can actually, they're essentially collateral that these companies can use. So, definitely. Hisham 56 Hamilton says, only 2 companies in the whole of North America mine and produce uranium, URG and Cameco. The rest are talking hot air and BS. Yeah. Canada, Australia, and Africa. Those are the 3 big regions. Scott says, Mega is just a collection of other companies' shares. Next Gen Consolidated ISO, like an ETF, is trading at a 30% discount to NAV. Oh, really? I actually didn't know that. So when we actually look at Mega Uranium, so this is actually pretty cool then, because one of the challenges with URA is it doesn't go all the way back to 2007, which is when we had this huge spike here. So what you're saying, if Mega Uranium is an accurate descriptor of the uranium mining space, then potentially we can kind of use this as a measurement to see how high we can go. Wow. So, all right, guys. So this is on the log scale, by the way. All right. So 2,500%. So if I just go on a linear, if I undo the log scale and look at this thing from a linear scale perspective, this is what we get. Of course, there's a lot of dilution that comes with these companies and so forth, but still, it's crazy nonetheless. Andrzej says, I think Denizen is trying in situ, Saskatchewan, but still at depth, not proven technology. Interesting. I didn't know about that. He also says, I like hot air and a lot of BS. I like hot air and a lot of BS in the uranium sector. Yeah, there definitely is a lot of hot air and bullshit in the uranium sector. So if you're a fan of both, then you came to the right place. D Parker DG, do you have a link or a list of uranium? Do you have a link or a list to uranium stocks or ETFs? I'm not sure what you mean by that. D Parker DG. Do I have a link or a list to uranium stocks or ETFs? If you're asking about the holdings in the ETFs, then Yeah, you can actually pull up the holdings just by, typing in URNM holdings or URJ holdings. URA holdings, sorry. So here, so for example, URNM, boom. First link. And you just scroll all the way down. There it is. Biggest holdings, Kazatomprom at 16%. Second is Cameco at 14%. Sput at 13%, and so forth. All right, guys. There's no more comments left in the chat. I think this was, we had a good run here. All right, well, if you haven't already, like, subscribe, comment, share, do all the YouTube stuff I'm supposed to tell you to do. I really appreciate it. Thank you so much for watching. I hope you enjoyed this video. You got something out of it. And if you did get something out of it, again, see me a like. If you haven't already, subscribe. And if you think this video might help other people, then go ahead and share it as well. So with that said, guys, I will see you in the next video. Bye, y'all.